Welcome, everybody, to the Profitable Manufacturer. This is our first show, and I want to introduce to you first my co host, Jason Snyder. Jason, say hello and a little bit about yourself.
Hello, I'm Jason Snyder. I'm the owner of Aspire Advisors, a Profit First Mastery professional, and co-founder of Summit E-commerce Advisors.
And I'm Annette Delancey. I'm the owner and CEO of She Makes Products, where we help women product entrepreneurs break through that six-figure revenue barrier so they can grow and scale profitably. I'm also the owner and CEO of Cast Covers, a rock and fun manufacturing company based right here in the United States, 14 years old. So we are very excited. Jason and I are all about eradicating the entrepreneurial poverty with the focus on manufacturing. There are many nuances and complexities and challenges when it comes to manufacturing, and we are completely aligned with helping manufacturers. It doesn't matter if you manufacture soap or if you manufacture robotic arms or sewn products, anything in between, we are here to help you get there. And one of the ways that we do this, the major way that we do this, is through the Profit First method. And the Profit First was developed by Mike Michalowicz back in 2014. I could be wrong on that, but Erin, our guest, will correct me if I'm wrong. It is now used by over 600,000 businesses across the world, becoming profitable. And it is a cash flow #1 branded system for entrepreneurs. It has saved my business, Cast Covers, twice. And so I want to then turn this over to Erin, our very special first show guest, Erin Moger, who is an early employee with the Profit First system. She is the child of an entrepreneur who was experiencing entrepreneurial poverty. How many of you have experienced entrepreneurial poverty? I know I have a few times. And so she ended up getting a degree in accounting and then became one of the first employees of Profit First. So she is a guide to the Profit First professionals. I'm a Profit First professional, and Jason is a Profit First Mastery member. So Erin, I would love to hand it over to you and have you introduce yourself and Profit First, and then we're going to give you all a very special surprise. She's come up with a $500,000 case study of a manufacturer through the Profit First system and see where it's falling short, where it's working, what needs to happen. So Erin, please, and welcome.
Hi, I'm excited for today. Welcome, first and foremost. Way to be here, way to take some time out of your day. I know that can be the hardest thing that we do, is just spending time intentionally on our business and not in it. And that's the power of what we're talking about here. So often we are just in the day-to-day. We have so many things on our to-do list. We have so many things we're trying to balance in our lives. Money is kind of hard to manage, kind of keeping track of all the things, where they're going, how they're coming in, how it's serving us. We all have systems for everything under the sun. I'm just going to share my screen real quick, but we all have systems for everything under the sun. Very seldom do we actually have systems for our cash. And so today we're talking about Profit First, which is a cash management system, but it's not just that. It's not just about the money. It's about us as individuals approaching money. And this is one of those areas where there's a lot of skill. Like it's a sliding scope. Anything can happen here. Some of us are really excited and motivated when it comes to money. Maybe we're not as intimidated. There are some of us that are just like, hey, listen, I like money. I enjoy having it. I have a general idea, but how and where, we'll see. We'll see. And then others are like, no, don't talk to me about money. I'm so scared. Stop it, right? So this is one of those things. Profit First is one of those things where we're addressing not just the actual movement of money and cash flow and the systemization, but we're also addressing the behavioral, internal humanity in the subject matter. And so the way that we do that is actually just by turning things around. We've been driven in society to open businesses a certain way, spend money to make money. We've been wired with different equations and evaluations that are all incredibly logical, right? Everything makes sense. I'm here for logic. But the reality is we're biological. We could talk about things in a sensible way, but it's not really logical from the perception of us actually applying it, right? So this is where we take all of that information and we plug it into our just internal wiring. And so one of the first places this happened, let's all give credit to Mr. Mike McAllowitz. He switched the formula around. And as we know from math, you can do that and still have the same exact results. But sometimes even just that tweak, the results are still the same from a mathematical standpoint, right? But what you're giving yourself as far as opportunity, you're completely expanding yourself, right? And so that's what this equation flop did. Just by switching that general accounting equation from sales minus expenses equals profit to sales minus profit equals expenses opened up opportunity because it leverages our natural wiring. Internally, the majority of us that have things that we prioritize are going to plan them in our lives, right? We love our kids. I'm going to plan my day around my kids, right? I don't love doing dishes. Guess what's not ever on my calendar? Doing dishes, right? But I know there are things that I have to do. This can happen with profit. A lot of times when we are in this space of like, what do I need to do in my business? What is most important? Things like profit fall to the end, right? If I'm so wired and like a clean house is most important to me, things like my children can fall to the end. We all have these things that we start to see in just the way our days go. This happens in our money too, right? And so when our money is in this space where we are not prioritizing what we know to be healthy and good, it tends to fall to the wayside. So what we've done and what Profit First is starts with this sales minus profit equals expenses mindset, flipping that coin around, giving us that intentionality so that we are taking what we know to be most important and putting it first, right? Our kids are most important, exercise is most important. Whenever we want to change the trajectory of our lives, of our business, we start to strategically situate things. And that's what we're doing with our money. So there are a few things that we do in support of that can help us through the process. So first and foremost, Profit First is accumulation, if you will, of 4 different practices that enlighten us to the reality of our financial situations, right? A lot of what we're doing here is creating freedom, right? I think when we talk about processes and systems, it can sound or feel very structured and kind of tense, right? But ultimately here, what we're doing is we're creating insight, we're creating clarity, and with intention. And in a few core categories, we're able to really take control of our money and how it's serving us. So Annette and Jason have both implemented Profit First. They both worked through everything independently in their businesses, with their teams, with their clients. And it's amazing how just having clarity in our money empowers us in the other areas of life. I mean, really seriously, think about the things that you have on your to-do list now, right? If you had clarity in your money and you had peace in the decision-making processes, how much more confident would you be making those decisions, A, but B, going home, not working every time you think of something, right? This is where you're able to have the peace and the balance that a lot of times we're looking for. But when we take these different pieces of our money and we bring them all together, we have ourselves a cash management system. So fundamentally, let's just talk about it. It's habits. It's building the habits. First, we have small plates, right? First and foremost, we oftentimes, when we make decisions, we're making them out of one bank account. So one of the first shifts that we make in Profit First is instead of us having one bank account, we have multiple bank accounts, right? When we think about this in relation to food, instead of having one huge plate to eat off of, we're taking it and we're breaking it down. I mean, think about it, okay? I just bought a bag of Costco popcorn the other day, and if there's anything you know about Costco, it's like huge. It's the size of my torso. Right? And you take that big old bag and you sit down on the couch and now you're consuming popcorn and a lot of popcorn. that's kind of what happens when we're looking at our bank accounts. If I'm going to go and I'm going to take this big old bank account and I'm sitting down and I'm just mindlessly paying attention to all of the things that I have going around with me, but mindlessly managing my money, I'm going to end up over consuming, not because I'm not intelligent or incapable, but just because I have other priorities in place, right? So by coming in here and saying, hey, instead of me just eating this whole bag of popcorn, I'm going to grab a bowl and I'm going to eat this bowl of popcorn, I tend to consume a lot less. Now, what we're doing here is we're taking that popcorn and we're breaking it up into different settings. We're breaking it up into different servings. We're taking that Thanksgiving tray and we're saying, here's a side, here's a side, here's a side, here's a side, all with intention so that we don't consume as much, right? We're creating definition and we're giving ourselves parameters. And in this parameter, we're also giving ourselves clarity. Instead of me looking and saying, okay, great, I have all of this food, I'm going to eat all this food, we're also creating eyeballs for ourselves, right? We can only consume so much. So if I eat through my plate and I sit there and I'm like, man, I'm full. Imagine if I had a big old plate and I was eating off of it. That's the same thing that happens in our business. That's the same thing that happens with our bank accounts. The simple task of just shrinking our plates, shrinking what we have available to us, and creating the clarity and the definition allows for us to consume less. Psychologically proven in every aspect of our lives. And it's all driven based off of this one concept called Parkinson's law. Right? This is the behavioral piece here. Parkinson's law drives the majority of profit first implementation. And this is this concept that we tend to use resources in relation to what we have available to us. So for example, time, right? If I'm sitting there with a big bag of popcorn and Netflix is just playing, next episode, next episode, next episode. If I don't have anything stopping me, I'm going to keep eating, I'm going to keep watching. Right? And this is where we create the parameters for ourselves. Parkinson's law is something that we are subject to. And this is how we're able to take control over our money in a really simple way that totally works in conjunction with our internal wiring. So we're going to eat off of smaller plates, but now we're also going to take and prioritize the thing that we know is most nutrient dense for us. In a business, profitability is one of those things that is going to drive us forward. It gives us the position to be able to make decisions out of reason and not necessarily emotion. It gives us opportunity to be able to leverage and pivot when it's appropriate. And honestly, it gives us that exhale so that we aren't necessarily driving a train without purpose, right? If we have debt and other things as well, this is what is essential for us to get our business back into a place of health. So we are going to take our profit first, similarly to our vegetables, right? This is all in relation. Thinking about us as humans, when we take our vegetables first, we're filling our bodies with the things that are going to be most impactful for our health, right? What is going to position us to make even better decisions throughout the course of time? It's by feeding our body fuel. Right? We're fueling our business with our profit when we're prioritizing it. So smaller plates, we're going to take and eat our vegetables first by prioritizing savings, prioritizing moving money into a place where it's not even going to be consumed. Then we have this removal of temptation, right? So with this removal of temptation, we're taking that profit account and even our tax account. We'll talk about this as a general overview, but we'll take that profit and tax account, the two most essential accounts in the business right now, and we're going to put them in a place where we're not necessarily going to be able to see them. Now, when I say two most essential, what I really mean is the two most essential savings accounts. Right? We really want to be strategic in making sure we're prioritizing savings. And by prioritizing savings, that gives us better eyeballs into what we actually have to function with. Right? So when we're removing temptation, now what happens by taking this savings account and moving it into another bank account, we are actually pushing ourselves further than we actually anticipated. And I think a lot of business owners, when they come into this space of understanding money, we don't often feel the need to grow or extend ourselves until we feel tight. Now, I know Jason and Annette, you guys have just been listening up to this point, but I mean, really, I mean, when you are comfortable, do you find that you're innovating?
Oh, completely. Oh, when I'm tight, I'm in survival mode.
Yeah. And that's kind of what happens. When we're tight, we're in survival mode. So we want to prioritize that profitability. But something that happens in our operating expense when we actually remove temptation and we remove the savings from our accounts is we're trying to make decisions in our business based off of what we have available to us. And when we're not ever uncomfortable, it's easy for us to just throw money at problems. It's easy. Right? Oh, well, I could just do this. I can just get that. But what if we said, okay, I have all this money and I have these responsibilities. That means I have X amount to solve this problem. How do I do that? How do I do that in a way that's not going to incur debt? That's where we start to see a change in our mindset. Whereas before we would have been like, oh, whatever, I'm just going to go on here and order this. That'll be the or I could just pay this person to do it. But when we're like, I don't think I can afford that. What else can I do? That is so powerful because that puts us in a place where typically we've created a sustainable solve, right? So small plates, veggies first, we're removing temptation, and then we're actually establishing a rhythm. Part of profit first is, and I'll show you the visualization of this, part of profit first is depositing money into the business and then flowing it out into these particular areas of focus. We have our income account, which is where all our money comes in, right? Now we get to actually document money moving in real time. But then from there, we pick a sequencing of flow. We pick and discern when we want money to move from this income account into these other core profit first accounts. These are our small plates. This is that turkey dinner that we're breaking down, moving it, owner's pay, tax, OPEX, right? Now with this, what we're able to do is start to see what's going on in our business. One of the biggest pain points we have in our accounting systems is we aren't involved in them. We aren't. Accounting is so mission critical. Your bookkeeping, all of those things, they're so fruitful and impactful in the information that we have. But oftentimes we're disconnected because we're not doing it. We don't get it, which is fine. This is a place where we can come in and say, okay, money is flowing. I'm going to move my money on a 10th and 25th rhythm. That's what we talk about in the Profit First book. And there's some wiggle room there, but let's 10th and 25th, I'm going to create a consistent flow in how money is moving in and then moving into these bank accounts. Now, what we're doing is by creating a rhythm that we are involved in, we're creating documentation and expectation. So when we're moving money in and money's flowing in and we're moving it to these accounts, we're going to start to identify, hey, this is what my income should look like. This is what my operating expense should look like. Great, money in, money out, money in, money out. Now, let's say 1 month, I have a lot of money come in and you're like, oh, that's nice. What happened? Now I'm asking questions so I can recreate that experience. Similarly, you might find you have extra money in your operating expense. Hey, that's funny. I wonder why. That's awesome. How do I do this again next month, right? You might find you start to engage with how things are flowing in your business because you actually have clarity in what to expect, right? This aspect of expectation is so fruitful because it allows us to be proactive when things are not correct. So for example, your operating expense is really low, or maybe you didn't have that deposit come in that you were expecting and your income's low. Now you're going to ask the question, oh, wait, I was supposed to get this. Why is my income here? Oh, shoot, they never paid the bill. Let me follow up. Or I never invoiced for this. Let me take care of this. So something that you may have not found is now present. Same is true with our operating expenses. When we're able to see the money in and money out, we're able to ask different questions. And what happens internally is we start to create a stronger mindset. We start to engage with our money in a way that actually impacts the day-to-day, and vice versa. We're looking at our business in a different light, so we're able to make more conscious decisions that are going to serve in the favor of our financial future. And that combo right there allows us to be a lot more comfortable in the decision-making process. It allows us to be a lot more confident as we're growing and strategically serving our business with our talents. So we can talk about that all day long. The general gist of Profit First is we're prioritizing our profit by using bank accounts, and we're moving money strategically on a regular basis with the intention of defining where that money should go. Now, that all sounds so fun, right? But the question is typically where do I start? Where am I? I get this, but how do I know how much money to put in my profit account, owner's pay, tax, operating expense? By doing an assessment, we can really come in and actually create an understanding of our business in particular. So that's where Annette brought up this fun, super exciting idea of a case study. So I don't know where, oh, there she is, popped in and out for a second, but I'm going to actually switch over into the case study and we can start talking about that. So let me just stop my screen share for a second. And I'm going to bring you into the back end, some of the fun stuff over here with Profit First, and show you. Let's talk about some numbers. So I know we've
got a case study.
Yeah,
a case study of a $500,000 plus or so manufacturer. And we're very excited that Erin's going to be able to present. So it gives you the black and white versus the intangibles. This is the tangible experience.
Yeah. So what's really fun about Profit First, and before I share my screen, kind of want to spend a couple more minutes on what we're looking to accomplish in this, right? A lot of times, just the general gist of Profit First is pretty straightforward. I'm defining my money and I'm creating strategic intention in where it's going and when. In my bank accounts, right? Good news, we have a partnership with a bank account. This could be really easy to set up, right? But ultimately, our intention in this evaluation, when we're talking about the assessment, we really want to understand if there is balance in your business or not. A lot of times when we get into this space of entrepreneurship, and this is what happened with my dad. I will tell you, I was brutally stung by the entrepreneurial bug, right? It bit me. It was venomous, right? Where some people that's motivating, I was like, no, there's a problem here. We got to fix it, right? And what happens is a lot of times when businesses get into, or business owners get into their shindig, they're going to start to involve themselves highly, right? And oftentimes that happens in our money as well. We start to invest all of our money into a specific thing. And that's not a bad thing unless it is jeopardizing what the business owner is able to do in support of their life. There needs to be balance in our money, just like there needs to be balance in our life and in our time, right? Often we are overspending, over-focused on the deliverable that we are jeopardizing serving our business owner. And who is the most essential employee any business could ever have? It's typically the business owner, right? So when we're not serving and benefiting the business owner, we're usually hindering the ability of the business to succeed because we start to feel trapped. Now, vice versa. If a business owner is overspending and taking too much money out of the business, now we're jeopardizing the ability of the business to satisfy a deliverable and sometimes strategically grow. So when we're talking about profitability, we are really, really conscious of creating balance in these two areas. We want balance and benefit to the business owner. We want balance and benefit to the business in the deliverable. And by being able to identify where we sit, we can then come in and say, where are these areas where I can create more balance and ultimately impact my health? So without further ado, I'm going to share my screen, and I'd love to talk through this a little bit with you guys. Like if you have questions, I don't have, we have a chat, but it's internal. I don't know if you can see those, Annette, or anything, but
I can see the chat, but
great.
I don't see anything new. Yes.
Right. Okay. So if we have questions or thoughts around this subject, that's totally fine. I'm happy to answer them. But when we're coming in here, this is kind of just thinking about things a little more generally at this point now. We can dive into the P&L, but we're going to be focused on what these accounts are meant to serve, how they are meant to create that balance, and what the definition is of these things so that we can further create depth, right? So I'm going to share my screen again, and we can talk through some of the details.
Great.
Now, Annette, I'll use your knowledge of the manufacturing world because this is one of those things where you guys have your own personal insights into your business, which means there's going to be a lot less gray and maybe a little bit more detail. Now, profit first is not accounting, which is where it can be a little tricky to kind of create this profit first strategy from something that is meant to communicate with banks and brokerages and other companies, right? It's a different language, and we're utilizing this to support and understand where money is now. That's our end goal. What is their balance, but where are we now? Where do we get started is ultimately what we're trying to find here. So first thing I do is when I'm going into an assessment, I will just try and define what money is coming in, right? What does the business have to actually function with? So over here, I have my P&L, I have my balance sheet, and I have my statement of cash flows. So if you want to gather your information, bring this in, just start documenting even off the top of your head what you believe you have and what is available to you. This is where we are able to pull this information. So this company is from January to December of last year. But if we'll just start with what we've got, and that's it. We're going to start with what we've got and just learn how we engage with money. What's going on? So this business, January through December 2022, brought in a total of $497,000 and $497,642. So I'm going to write that in there. Now you can do this too as well. I don't know. I'm sure you'll be able to get from. I'm going to round up just for the sake of myself. They might be able to get you some fillable PDFs and things like that to support you guys implementing. But this is where let's just do the best with what we've got, even if it's just general numbers. Once we have materials and subcontractors, or once we have our top line revenue, then we start talking about materials and subcontractors. Now, this is a hefty subject matter. So what I want to define here is exactly what we're looking at. You guys are manufacturers, and there are a lot of things that can go into this. So we kind of look at this like direct cost. When we're talking about materials and subcontractors, we want physical, tangible goods and outsourced labor that is required to facilitate the full production. Okay, so over here, there's a number of different things, but this is where you also see there's so many other things in this cost of goods sold section that impact our cash flow. And this is what I want you to look at it as: cash, money in, money out. What are we working with? So actually coming into these numbers, we may need to dig a little bit. So we have materials over here. We have $19,000 in materials. We have e-commerce fees. These things are super impactful in the money that we actually have to function with. And what happens with business owners, a lot of times we anchor on this top line revenue number. Hey, how much money, how big is your business, right? Tell me about your business. How healthy is your business? All of those things are associated with how much money we have coming in, which naturally, going back to that behavioral aspect of things, is what we anchor on. But oftentimes we don't even see any of this money. Right? We don't see those fees. They don't come in. They are not here and present. So there are a couple of things to be mindful of when we're talking about cash flow, but ultimately we don't even get to see this money, which means that we need to remove it from our mind's eye, right? So $497,648, I put $49 in there. And then let's just look through materials and subcontractors. Materials, our fees, again, we don't necessarily see them, so we can consider those in the material and subcontractors calculation. There are some things in here like, well, freight, I guess, is from the old one, but Yes, inventory, fabric, shipping costs is one of those things that we don't typically consider here, but I don't want to go too deep or overwhelm. Shipping costs is usually what we consider a operating expense as opposed to something that is highly prioritized in our materials and subcontractors. And the reason being is what we're trying to calculate here is our real revenue number. Like, what number do we actually have to make decisions with?
And if I could interject here,
Yeah.
A lot of the discussions I have, and I had
Yeah.
originally as a manufacturer getting started in Profit First, is, well, if it doesn't ship, if I don't include those costs,
Uh-huh.
I don't have a business.
Exactly.
And so that's always been a balance in that discussion. You know, for example, this particular example has, you know, obviously Amazon and eBay, and so things are probably shipped into Amazon. Those are, you know, and they ship out, you know, that
Yep.
type of thing. So it is a balance, but that's something where a Profit First professional can really help manufacturers.
Yeah, absolutely. And this is where we're going to find the flow of things that are really going to serve you and your individual journey and money.
Well,
So
I should point out that this particular case study is also a manufacturer that is selling,
yeah,
but is not just forwarding to distributors. They're also
uh-huh.
to consumers. That's obvious based on this.
Yeah, which is really super impactful as we're looking at everything. So if I come in here and I start just generally calculating out what this business has to function in order to make things happen, I mean, this entire cost of goods sold section pretty much minus the shipping can be considered materials and subcontractors.
Mm-hmm.
So we have the 241, 507. I know this is a lot of numbers and your eyes might be glazing over, but the really fun thing about something like this is now if you have a general idea as to how you can calculate it, now you can take a stab at your own. Maybe your numbers won't be so intimidating and overwhelming, and that can actually empower us to have a little bit of peace and breathe. Now, up here we have the outsourced labor. It's not technically considered a subcontractor, but the reality, or documented as a subcontractor, but that still counts. The definitions there are parallel. So as we're going through, I have calculated out just generally this number minus the shipping, and we won't forget about the shipping. Don't worry, it's up here. It's on our minds. But what we're doing is we're really creating a hierarchy of flow. Right? Money is coming into my business. The intention in this is creating that prioritization even before I talk about something like profit, right? These are so mission critical. I need to make sure that this money is here. And because it is so essential, I need to make sure it's in an account and ready for me. Now, fees and whatnot, we might play around with this percentage a little bit just because that is such a large percentage that never even goes into your bank account in most situations. We would address that as we're getting into how money is moving. But just recognizing what we actually have available to make decisions with, you'll see that we go from, and it happens down here too, we go from $400, almost $500,000 to literally 300. Right? That's a huge, huge deal. Now I'm in this space where it's like, okay, great. I'm going to make very different decisions with $300,000 than I'm going to make with $500,000. And that's our intention. If you are in a space, and I'll just say this, if shipping is a huge, huge aspect in your business, I typically will encourage opening up another account. It doesn't mean that it's less prioritized. It just means that we don't want to prioritize shipping over paying ourselves, because there's probably an option for innovation and maybe exploration. We can explore different things potentially. Doesn't mean that it's less important. It just means, okay, how am I going to look at things from this perspective? And if that is overwhelming, we can always plug and make some adjustments. But once we're in here and we're looking at the business, materials and subcontractors does change what we have available to us to function with. But the beauty in this industry is a lot of times you guys already kind of live with that wiring. A lot of other industries struggle with this, but you guys, this is here all the time. You're constantly looking at what it takes to produce, what it takes to get things moving, how it's really going to serve the full picture of things. So you may already have that internal wiring towards this general gross profit number. We call it real revenue because we deal with a number of different industries. But with this number, now this is where we're talking about moving money into our profit. We're talking about owner's pay, tax, and operating expenses. This is all after we've prioritized what is mission critical. So when we're talking about profitability, it's not like, hey, you make $1, we're moving money aside right into this profit account. That's one of the things that we will prioritize, but it's not before the production. It's not before the production. What we're doing is we're creating funding for the production by opening a separate account and plugging that number, plugging that money into a strategic account for the sake of being able to purchase inventory, materials, the people that are going to create, right? They are all so mission critical that we are going to make sure that we have the funds to be able to afford them within the season and the time that they need to be afforded. So as we're going through inventory, I know this one had some inventory in it, but just don't be afraid or fearful to include those things that are directly connected to that definition. So when we're talking about profit, again, it's after the real revenue number. It's after we've provided for our materials and our subcontractors. This profit number is not like, hey, listen, I'm going to go to my net income down here at the bottom and pull this $58,000. This is where so many people find themselves just overwhelmed with their accounting and disconnected to their money. Because most people, when they see this $58,000 and they hear that they're responsible for paying taxes on it, they're like, okay, but where's the money? I don't have $58,000. Why am I being taxed on $58,000? I don't understand, right? This question, where is my money, is what we want to ask by doing this evaluation. But we also want to answer it with a very clear solve, right? When we're talking about profit, from the profit first perspective, we want you to ask that question, and then we go right over into our balance sheet. Oh, where are you, buddy? Here it is. We go right over into our balance sheet and we answer the question, right? So for every question we have in our money, we want to be able to find the answer because we've created the clarity. Now, in here, the definition for profit is really truly an emergency fund. We want to see cash in the bank. We want there to be a clear representation of savings for the sake of having a cushion. Now, this business, you can see they have in their asset section on the balance sheet is where we can see that money in the bank, but they obviously have some things broken out as far as banks go. So they got a few. They've got a cost of goods sold account, which is pretty parallel to materials and subcontractors, right? They're just using different terminology, again, creating the clarity for themselves. They have a vault, they have tax, they have a promotion account, payroll. They've defined their money. Now, doing this from with a business that has a profit account. Oh, my screen's just a little tiny. So profit is 5 up. So we're 1, 2, 3, 4, 5 up. So we got 1902 in here. Now the thing is we want to be mindful because this is a full picture of everything that they've got going on. But what we want to see is what they actually have in their savings. Now, if you don't have Profit First implemented in your business, that's fine. Let's go back to the definition of the account. This is an emergency fund. It's money set aside. If you have a savings account and you would honestly say, hey, listen, no, that's just because I want a cushion in my business, then we can actually come in here and define how we're going to use that cushion, right? If it's like, hey, listen, I want to hire sometime. I want a little extra cushion because I'm going to have to hire it sometime soon. That can be a strategic investment account. But if it's not truly for the sake of like, no, listen, the pandemic was horrifying. I never want to have that happen again. I need to make sure I have a cash position just for peace of mind. If we don't really have the intention of spending this specifically, typically it's an emergency fund. Even if it's like, hey, listen, I want to have 2 months of my expenses saved up for an emergency. That counts. That totally counts. What we want to be mindful of is if we have huge chunks of money and they are all ready to go in conjunction with something that we have planned. That's a strategic investment account. But again, we can keep things simple here. If you have a savings account, it's for the sake of emergency. plug it in here. It's okay if this number is 0 too. This is not a judgment call. This is really just, where am I now? How am I engaging with money? The question that we're trying to answer here is, do I have a system for saving? If I have a system for saving, I'm going to enhance that. I'm going to take what I've got, maintain and increase it. If I don't have a system for saving, maybe this is where I start. Maybe it's just I take this account that I have that doesn't necessarily have money in it or doesn't necessarily have a definition, and I say, this is where I want to start strategically putting my savings. Even if it's 1% and we start moving money into this account, that's really our intention in this, is where do we stand so we can take that next step. Now, what we want to be mindful of is this is a balance sheet. Typically, we'll want it to be a comparable balance sheet so that we can see the change in the account, make sure that it's actually going to be relevant to the timeline that we're looking at.
You're recommending year over year comparable.
Yep. Exactly. You want that comparable so that way, because the balance sheet, if you're not familiar, is cumulative. So it's over the lifespan of a business, which is how these numbers can sometimes be so incredibly large when maybe they aren't a clear representation of that moment in time. So once we have that, then we can move into the other area of benefit for a business owner is owner's comp. It's probably the most obvious place of benefit for the business owner, but what we want to know is, as a business owner, what are your expectations from the business? How do you pay yourself? How much? How often is kind of the question that we ask. And typically there's a couple places that you can find this calculation. First and foremost, if I come down here into the contributions, the draws and distributions, there's usually a few ways that people pay themselves. It's through draws and distributions. It's through personal transactions through the business and payroll, right? Now, depending on how you're structured, you may have flow and intention in how that money is moving. Otherwise, it may just be a surprise, right? You might not necessarily know exactly what that is. Now, this business doesn't necessarily, again, it doesn't have that comparable, but I know based off of the conversations that I have, their pay is about $90,000. So what I'll do is I'll look and I'll say, okay, draws, distributions, let's go over to their P&L, and I'm going to scroll just a minute and see if I can find, oh, this is 2021. Oh, is that P&L? I'm going to scroll into their operating expenses on the P&L for January through July or December of 2022. And I'm going to find their officer salary, principal salary. You'll typically see payroll. And if they have employees and whatnot, you can break that out. But if you're the business owner, that's an easy question to ask. How do I pay myself? How much? How often? And then you can calculate it out for the timeline that you're evaluating. So for this business owner, I know that of the draws and distributions, they took about $90,000. And this is where we can just ask those questions. What am I expecting? How can I continue to maintain? Is there anything in here that is maybe not for the sake of growing the business? It's more just to serve the business owner. And this is where we don't necessarily need to be accountants, okay? We're just trying to get a general idea of how money is flowing, for what reason, and how it's serving people. But I laugh a little bit because this is where we tend to start to justify. Oh my gosh, I'm not paying myself anything. This expense goes into the business and I absolutely need it. And this goes here and that. But really, ultimately, at the end of the day, we are experiencing benefit in some way, shape, or form. So if you have your health insurance coming in through here, that's great. If you have a vehicle that isn't necessarily going to impact the deliverable, great. There's nothing wrong with having these things, right? You may never take a paycheck and have a lot of benefit from your business. What we want to understand is what the expectation is from the business for you so that we can continue to maintain and create the balance as we increase. So if it's a 60-40 split, don't go crazy. If the business would need to replace it if you weren't actually paying for it in the business, it would be an operating expense. If it's something that serves you, just consider it an owner's pay, right? How do I pay myself? How much? How often? We'll calculate that in the P&L. We'll use the balance sheet to kind of look and see what the draws and distributions are. And then that'll give us our general gist. Otherwise, you can just calculate it out and say, hey, how am I paying myself? How is that represented? It may be here in this chunk of expenses. but I'll leave that up to you to kind of calculate. So next we have our taxes. Now, taxes are a little different when we're looking at it from the profit first perspective. This isn't like, hey, you see the word tax, everything's going to plug. When we're thinking about taxes, we're thinking about the business owner intentionally. This is their personal income taxes, right? If you're on payroll, the fun thing about taxes is they're typically withheld automatically. Now, if you're not on payroll, the fun thing about taxes is the government doesn't forget and they come and ask you for them later. So if you're taking out draws and distributions, it's really, really great to just have all that money and do what you're going to do. But this tax account is kind of set up to help protect us the same way our W-2 would, right? This tax account is strategic for the business owner. We want it to cover their own personal income taxes as well as any responsibility they're going to have for their profitability, right? Instead of us trying to spend $1 to save a quarter and just having no cash position in our business, we're trying to strategically prepare for what our responsibility would be if we were fiscally responsible. Now, with this tax account coming in here, again, our goal in this is to really understand what the business owner needs to cover their responsibility as far as the IRS goes. Now, instead of me giving you $90,000 and just running with that, what I'm going to do is I'm going to give you maybe $60,000, $70,000 in your owner's pay, and then I take the difference of what your tax responsibility is likely to be, and I'll put it here. But gradually. So it's not something where I'm like, hey, $90,000, shoot, we have a tax payment. Can I have $30,000 back? And it's what, a year later? Now you're like, oh, well, shoot, I don't have that, right? So this is designed strategically with the intention to make sure that the business owner is never in an uncomfortable situation with their taxes that might jeopardize the well-being and financial situation that they'd be in thereafter. So when we're looking through this, like you'll see taxes here. Now I would ask some qualifying questions like, but we're not going to include payroll taxes for anybody other than the business owner. We're not going to include property taxes or sales tax. While that is super important, it doesn't go in this bucket. This is truly for the business owner. So in here, as we're doing some calculations, we would actually go over into the balance sheet and look at maybe sometimes they have their tax responsibility here. I know this business, when we walked through everything, did. Their taxes were about $31,000. Oh, that's not the balance sheet. Their taxes were about $31,000, but you can kind of see everything break out appropriately into the buckets as you start to correlate them with the actual financial statements that you have. So I'm going to plug in the $31,000 just because I know what is going on in this business in particular. That was actually part of their draws and distributions. So as we're looking at the details of the business and operating expenses, we all anchor, most people are pretty familiar with like their big purchases and things that they're responsible for regularly, right? Do you guys find that, Jason and Annette, do you guys find?
Oh, yes.
Typically?
Yep.
This is where they have a little bit more knowledge and where it's hard to kind of keep track of everything all the time. That P&L, right? It's all listed here so beautifully. This is the money that I've got coming in. This is the money that I've got going out. We can read this and it makes sense.
Mm-hmm.
However, there are other things that impact our cash situation that actually have money moving in them that aren't documented here. So when we're talking about operating expenses, I'm not going to say, hey, come down here, take your operating expenses and run with it. What I'm talking about is our regular cash responsibility. When we have consciousness around what that number actually is, that's where we start to find that we are empowered, right? When we actually know how money is flowing and where it's going and why, we start to feel like we actually can make decisions. Otherwise, it's just guessing. And again, this doesn't have to be a guessing game. This can be really intentional and really clear, even if it's not perfect. So coming in here, our regular cash responsibilities is an equation, and we can do this together. But what I'll typically do is I'll take the expenses here. I'll take that total expense number here, $200,596. Okay. And I'll take that and I'll go up to the cost of goods sold section because that's still mission critical. And I know I used shipping as one of those examples of, hey, listen, this might technically be an operating expense, but I kept it separate so we can do it here. If there's anything in the cost of goods sold section that I haven't already considered, like this shipping number, then we can add that in there. So I'm going to take this 35,781 and I'm going to plug that into this calculation. Now, if there's anything in these expenses that I went through and I was like, okay, well, this is insurance for the business owner. This auto actually isn't necessarily serving the business. This, I would subtract those out so I'm not double accounting for anything. With that in mind, there's still a number of things that take place outside of this document. So I'm actually going to go over to this balance sheet, and I'm going to look at a few particular areas. I'm going to look at their asset section, right? So this doesn't necessarily have the change in their accounts, but when I'm in the asset section, what has changed here, right? Did I purchase any equipment? Did I purchase any additional inventory that maybe isn't documented on the P&L? What in particular has changed here? Maybe I purchased a vehicle, for example, things like that. What has changed in the asset section? A lot of times, if you don't have that comparable balance sheet, the really fun thing about financials is you can get a statement of cash flows. I don't think I have one here. No, but you can get a statement of cash flows and it'll show you kind of all those little changes. But the statement of cash flows will also show the change in the asset section as well, if you're maybe not as familiar. But if I'm coming back into the balance sheet, any change that I see in these accounts, I will add up and I will plug in addition to that, a calculation that I just made before with the total expenses plus any cost of goods sold not already used. I will subtract anything out I've already accounted for, then I'll add my assets in. Now, when I talk about the regular cash responsibilities, one of the biggest places that impact our success and our clarity in our money is actually our debt. Right? Actually, when we talk about profitability, this is probably the number one place where people are like, well, I'm sorry, you're going to have to hold off. I have debt. I got to pay it off. Now, the truth of the matter is you can't pay off your debt if you're not profitable, right? And I'll tell you a little bit about the profit account, but sneak peek, it's actually designed strategically for you to pay down your debt, right? We prioritize profit even when we have debt because there is a sequence to our profit that allows for us to pay down our debt on a quarterly basis, okay? But the other thing is, when I'm coming in here and I'm looking at this balance sheet and I'm going to come down into the long-term liability section, this is where money from this period of time is still being used to pay off things that aren't necessarily documented in this season of time, right? So our current liabilities, these are things that are happening kind of in real time, if you will. So for example, you swipe your credit card, it's going to typically be classified in certain ways on the P&L, right? Now, if I see that this number is increasing period over period, time over time, or if I ask the question, hey, are you able to pay off your credit card? And the answer is no, my question would be, hey, why are you incurring debt? Is this to support your business, right? Do you feel like you can't support your business with what you have? And if they are continually trying to support their business or pay for themselves or whatever it is via this debt, and they're not paying it off on a monthly basis, a regular basis, I would say this is a good red flag. This is a very chunky red flag saying, all right, we should probably take a look at something, right? Now, long-term liabilities, however, these are not already included on the P&L. So instead of us ignoring them altogether, what we'll do is we'll come down here and say, okay, what long-term liabilities do I have? And how has the categorization or the actual number of my responsibility changed? And we can tell because down here, we have the category long-term liabilities. Now, if we scroll over, you can see this company doesn't have any, but typically if you have a balance sheet that has a change category, you may see that over the course of time, that starts to shift. Now let's see, here's the balance sheet Oh, this is 2022. So if you get 2021, if you get the balance sheet for 2021, you can actually see, okay, this was here. Maybe they had $100,000 in debt last year that they were able to pay over the course of the year. $100,000 might be extreme. Who knows? Right? But now you can see, okay, they did have debt at some point in the last year. They paid it off. But looking to see what the business actually has in the debt, long-term debt, is really, really important because this impacts our regular cash opportunity. If we're constantly putting $1,000 into historical debt every month, we don't have $1,000 to focus on growth. We don't have $1,000 to focus on hiring. We don't have $1,000 to actually pay our bills now, right? Which can make sense for why we use short-term credit cards and things like that to compensate. Now, this is where we will take the full picture of that calculation, whatever that number is in long-term liabilities, plus all those other calculations that we made, and we'll plug it in. Now, in this business, we have, well, actually, it works out to be just around here. It's like 200. Or wait, what is it? Hold on, let me calculate it back out. 236 minus the, okay, so this is about 190. Okay, and I know that just because of the conversations we've had. Okay, so I'm going to now see here in this business that there is some debt, right? There is some change here in what they've got going on. But what is also true, oh wait, hold on, sorry. Yep. So what is also true is here when I come up to this business, oh wait, sorry, that's backwards, not 90. It's 150. So this business, 150, sorry, I forgot to subtract out the whatever I used in here. So or the owner's comp from what I know. So that's where you have to make sure you subtract out whatever is used in that wages section out, or else it'll actually skew things. So right now, this business is in the green, which means I'm off by $19,000, which is a good chunk of money. But the reality is, sometimes that happens. And the reason this is actually happening in this situation is because they have some cash in their bank, right? They have all these other accounts. Now I could take these and calculate them up and say, okay, they have a vault account, that's probably profit. If I could see the change, I would have a lot more accurate dollar amounts in these things. But if I could see the change in these accounts, you would probably see that they have a lot of money in their checking account for their payroll. There's money in here for the promotions and the vault, and that's continuously growing. So the interesting thing about something like this is it may not necessarily have fallen into these particular categories in the way that they are, but knowing what we know of the business and knowing of what we know in the areas that they want to create clarity, I can create that additional picture and say, okay, look, let's see how this is balanced. So I'm actually going to run the report so you can kind of see how this plays out. Now, if I were to take those other things and plug them in, some of them would be profit. Some of them would be operating expense. Things like promotions and payroll, those two things are operating expense. But if I change that to go into the operating expense, I can kind of show you exactly what that looks like as far as percentage points with just a quick calculation. Now, this business, they have more cash, and that would just have to be calculated into here. But what I want to focus on in this is it's showing us where we stand. Profit First is percentage based. So every dollar that we make, we want to see where exactly the money is flowing. So 1% right now of what the business is bringing in goes to profit. Right? Our target for this size revenue range, which is from the book, you can read the book Profit First, it's on page 68, is typically around 10%. Our target will be 10% for this revenue range, which isn't bad, right? What we're doing here is not defining whether or not this business is good or bad. What we're seeing is there's an area of opportunity here. 3 Cheers, they have some degree of a system for saving. We have some room for improvement here, right? How do we create this? Is the question, which is where the innovation and the buckets and the cash flow evaluations and prioritizing our profit really serve. Same with owner's comp. We're doing a great job, right? Our target is 35% here. We have 31% in our account. Still some room for improvement, but what's also awesome to recognize is that profit owners pay in tax. When we talked about the balance to the business owner, these 3 accounts serve that balance to the business owner. So we have profit at 1%, owner's comp at 31%, and tax at 11%, which is, I mean, we're at 43% right there in conjunction to the 60. That's not too shabby. Still room for opportunity, but because they prioritize their taxes, they've created that balance even in just that preparation. So there's room for improvement in all these areas. And ultimately, our operating expense being at 50, which would probably be more like the 58 if we took into account this change here. Or maybe the 55 if we actually calculated this out. This might be more like 5 if I go into and see the change in those different accounts. But this is where we're able to see, okay, where am I now? What can I do today that will allow me to be more in conjunction with elite business owners in this revenue range? Or what can I do today that it will make me feel more confident in my business and allowing me to be more profitable in the process, right? So this is how we go through and kind of evaluate what a business is doing. We don't have to dig too deep. We can just ask ourselves some core questions, try and define maybe how we fall in alignment with these definitions, with this intention in these accounts. And ultimately, the goal is to get started. So if you're in a place where you're like, listen, this is something I am constantly trying to understand, that I really do want to create more insight into what I have, most of the time we already have a savings account. I mentioned it before. If we can start the process by just moving even 1% of profit or 1% of our income into this strategic profit account, that positions us not only to have a little bit more peace in our financial situation, but it positions us to be able to pay off debt. It positions us to have a lot more freedom in how we're approaching our future. And that right there is surprising at how quickly we can create money in our business by just tweaking the things that we already do. So
Erin,
that's the challenge today.
I have a question. And
Yes.
I know a lot of manufacturers will ask this. The materials
Yeah.
and subcontractors do not have a percentage. They don't
Uh-huh.
have the actual and the PF percentage. And why is that?
Yeah. That's a great question. So the reason it doesn't have an actual percentage is because we recognize there's so much variation here. The percentages we have calculated down here are based off of a ridiculous amount of research into businesses in these revenue ranges. So Mike, when he actually went out, Mike McCallitz, when he went out and he created the book, that was where his attention was. Now, the materials and subcontractors, this varies based off of industry. This varies based off location. Now, I don't ever want to put any business in the place where they are justifying these things just because of their industry and location. But the reality is the business you have built is off of whatever is here in this materials and subcontractors account, which means that that's your responsibility now, right? There's not a target here because really we kind of want to compete with ourselves. We want to bring ourselves into the conversation in relation to our industry. And that's where Annette and Jason can really help, is define, okay, what are my expectations in materials? What should I be striving to accomplish as far as my labor costs go, right? These little things, these moments of clarity can be had when you actually connect with somebody who is an expert in that world.
Right.
Yep.
Okay. And so what we want to pay attention to our time. And so do you have another sheet or you want to wrap up?
No, that's it. I mean, ultimately, at the end of the day, the goal in this assessment, the goal in Profit First, is creating authority in a place we didn't feel like we have it, right? And in that space of authority, we typically are creating consciousness and clarity. And at the end of the day, when we have those two things and we're joining that in with our goals and vision, we tend to become a nice moving steam train. And it doesn't start with a 100-mile-an-hour shift. Typically, it starts with just the flip of a switch. And
when we first started with Profit First, I was completely inverted in my company. And it took a couple of years for it, but I kept at it. And that's one thing that Jason and I can help, and any Profit First professional can help understand. Yeah. We have rollout plans that shows an 18-month or 2-year process and see, and then you can use it to measure against your progress. Jason, do you have any questions for Erin?
Not today. Just like Erin was saying, that I'll add to it is it's being intentional with your cash and your cash resources in your business and giving that clarity for decision making. You're not going to solve every single problem especially in the beginning, but you'll get clarity 70, 80, 90% of your finances. So you can focus on those 10% where you don't have that clarity and knowledge yet.
Yes. In fact, I'll use an example. With the demise of Silicon Valley Bank, my payroll provider sent me an email saying, we can't process your payroll. And I thought, okay, that's not a problem because I'll get money in my payroll account and I'll just write the checks. And a lot of times people move money around, and if there's any problem, now that's an extreme example, but Profit First is set up for success. And that's just one example of that. One thing I forgot to mention at the beginning of our call is the flow of our call. And so this is part of the, first call, and so we wanted to thank Erin very much for the in-depth, comprehensive analysis of Profit First. Thank you very much. And I'm sure we're going to take little sound bites for a long time out of what you provided. If anybody has any questions, I do want you to either reach out to myself at Annette at shemakesproducts.com, or Jason. Jason, go ahead and give your email. You're right, the one you want people to refer to.
Jason at aspire.llc. That's aspyr.llc.
And we also have a website, theprofitablemanufacturer.com. Again, that's theprofitablemanufacturer.com. It's going to be hosting our live broadcasts as well as some other information. Feel free to sign up for any emails we might come out with. We are just getting started. We'd love to hear your comments about the show. We'd love to hear what you would like us to talk about. We're on every Mondays at 9 a.m. Pacific Standard Time. Jason and I are co-hosting. So today I was the host. Next week, Jason will be the host, but I'll be here as well. And so we flip back and forth and share the responsibilities. And we're going to see what you need to be a profitable manufacturer. Jason, any closing comments?
Just looking forward to continuing doing this and sharing more and more information about how to be profitable in your manufacturing business.
Great. And I think a banner just came up, but it is theprofitablemanufacturer.com is the actual URL. And we're just getting started. So we appreciate your watching our show. And we really are here to help you become profitable through the Profit First method. Erin, thank you so much for your time. Thank you for the case study. Thank you for answering questions. And I know you're a significant resource for all of the Profit First professionals.
Yeah, glad to be here, guys. Way to get your first one done.
Yeah. All right. So shall we sign off? And we'll see you next. I'm looking at our flow, our show flow. We'll see you next Monday, 9:00 Pacific Standard Time, most likely on Jason's LinkedIn channel. But we'll make sure we let you know about that. That'll be on our website as well. Okay. Take care.